The Nightly Business Report.
Good evening. Tonight, Sri Lanka's Inland Revenue Department hauled in a staggering 2,620 billion in 2024, a 42.22% surge from the previous year. Sri Lanka could expect a favorable response from the US on the looming reciprocal tariffs by the 8th of July, according to the latest cabinet briefing. The gains tracked yesterday at the Colombo Stock Exchange are unfortunately not held by the end of today's market activity, as both the ASPI and S&P SL20 closed the trading day in the red. And the S&P 500 and Nasdaq closed at record highs, boosted by gains in technology stocks and trade agreements with Vietnam that eased concerns over prolonged trade tensions. Good evening and thank you for joining us. Sri Lanka's Inland Revenue Department hauled in a staggering 2,620 billion in 2024, a 42.22% surge from the previous year, according to its recently released annual performance report.
The notable revenue jump, a cornerstone of the government's International Monetary Fund-backed fiscal consolidation efforts, was overwhelmingly driven by aggressive value-added tax reforms and a dragnet that pulled hundreds of thousands of new taxpayers into the system. While the headline numbers point to a successful year in bolstering the state coffers, the report also reveals significant internal challenges, including a looming staffing crisis and a heavy and growing reliance on indirect taxation that raises questions about the long-term sustainability of the current strategy. The backbone of the IRD's performance was an unprecedented 88.59% explosion in VAT collections, which climbed to 1,309.68 billion rupees from rupees 694.46 billion in 2023. This was the direct result of the government policy that increased the standard VAT rate from 15% to 18% and significantly lowered the registration threshold to 60 million rupees per annum, pulling many smaller businesses into the tax net. This surge meant the IRD's collections accounted for a crucial 70.73% of the government's total tax revenue for the year. The department's push to widen the tax base saw dramatic results. The number of individuals registered for income tax ballooned from 539,862 at end 2023 to 976,498 a year later.
Cabinet spokesman and Minister Dr. Nalinda Jayatissa expressed confidence that Sri Lanka could expect a favorable response from the US on the looming reciprocal tariffs by the 8th of July, easing concerns of a severe blow to local exporters. Speaking at the weekly post-cabinet media briefing, he acknowledged that the sweeping tariff measures announced by US President Donald Trump on the 2nd of April sent shockwaves throughout the global market. The measures include a baseline 10% tax on all imports with significantly higher rates on countries with which the US maintains trade deficits. Sri Lanka in particular faces one of the steepest rates at 44%. Dr. Jayatissa noted that Sri Lankan authorities had proactively engaged with their US counterparts to protect local industries, including several rounds of discussions via video calls with the United States Trade Representative in Washington. When asked if there would be any joint statement regarding this, Dr. Jayatissa said it would depend on the US government and the USTR, and the next steps will be based on those. The Central Bank of Sri Lanka today launched a series of financial literacy initiatives, including the country's first national financial literacy curriculum, aimed at improving public understanding of finances and economic management.
Central Bank Governor Nandala Veerasinghe introduced the curriculum said access to financial information enables individuals to better manage their money, plan for the future, and improve their economic well-being. Veerasinghe said during the launch event at the Central Bank that this financial system transforms the role of the consumer, empowers individuals to make well-informed financial decisions, protecting themselves from fraud, strategize for the future, and ultimately contributing to an inclusive economic growth. The initiatives were developed in collaboration with the University of California with support from the United Nations Development Programme and the Japan International Cooperation Agency. Asuza Kubota, resident representative of UNDP, said 33.4% of Sri Lanka's population is vulnerable due to household debt, with many depending on loans to meet basic needs such as food, healthcare, and education. Also present at the launch were JICA Chief Representative Kenji Kuronuma and University of California Vice Chancellor Senior Professor Nilanthi De Silva. The event also marked the introduction of the Certified Trainer in Financial Literacy program.
Sri Lanka's Hambantota Port said it had promoted the potential for logistics and investment as a South Asia hub to a top delegation of officials from Nepal who personally visited its facilities.
The delegation explored potential business opportunities and gained first-hand insight into the port's infrastructure, strategic operations, and investment prospects. The visit was part of a broad initiative to strengthen regional cooperation and promote cross-border commercial partnerships, a statement by HIP said. HIP representatives shared insights into how the port's unique location and multi-purpose capabilities position it as a key logistics and maritime hub in the Indian Ocean region. The delegation were given a tour of HIP's facilities and briefed by officials on the port's capabilities, growth strategy, and ongoing initiatives in port services, logistics, and industrial development. The delegation was invited to encourage Nepalese investors and enterprises to explore opportunities for trade, logistics, and industrial collaboration through partnerships with Hambantota International Port Group.
The Sri Lanka Export Development Board, in partnership with the Australian High Commission, the Australia Trade and Investment Commission, and the Department of Foreign Affairs and Trade, hosted a high-level seminar titled Leveraging Australian Best Practices in Export Promotion in Colombo. The event, held under the framework of the Australia-Sri Lanka Trade and Investment Framework Arrangement, brought together key stakeholders from government, trade and industry to explore how Australia's export development strategies can be adapted to strengthen Sri Lanka's trade ecosystem. Inaugurating the seminar, Mangala Wijayasinghe, the chairman and CEO of the EDB, welcomed the gathering and emphasized the importance of integrating global best practices to boost Sri Lanka's export performance. He noted that the seminar is a timely initiative to advance trade facilitation, improve market access, and support SME exporters. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The gains tracked yesterday at the Colombo Stock Exchange are unfortunately not held by the end of today's market activity, as both the ASPI and S&P SL20 closed the trading day in the red. The turnover for the day stands at 5.6 billion. For further insights, we speak with Shahana Ganaratnam from First Capital Holdings.
Thank you, Anuradhi. The Colombo stock market reversed its gains from the previous session, closing in the negative territory. Despite a strong opening and continued upward momentum during the morning hours, the market shifted direction by midday and maintained a downward trend, ultimately closing at 18,101, down 41 points. Key negative contributors to the ASPI included Haley's, CT Holdings, Colombo Dockyard, Ceylon Grain Elevators, and Sampath Bank. Market sentiment remained broadly optimistic, supported by strong retail investor participation and moderate involvement from high net worth individuals. Daily turnover reached Rs 6.9 billion, marking a 9% increase over the monthly average of Rs 5.2 billion. The capital goods sector dominated trading activity, contributing 26% of total turnover, followed by the banking and material sectors. Thank you.
Sri Lanka's external sector continued to show resilience in the first 5 months of this year, with the current account maintaining surpluses throughout the period, supported by higher remittance inflows and a recovery in tourism. For further insights on the external sector, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Anuradhi. Sri Lanka's external sector remained resilient in May 2025, continuing the trend of monthly current account surpluses recorded since January. The surplus was supported by a 17.9% increase in remittances to $642 million, while steady earnings from tourism, which rose to $164 million, also supported the cause. Despite a widening trade deficit to $473 million, driven by a 7.3% increase in imports, outpacing the 2.3% in exports, the overall current performance improved. Gross official reserves stood at $6.3 billion, covering 3.8 months of imports. Foreign investments showed a marginal improvement, with net foreign inflows to government securities as well as Colombo stock market. The Sri Lankan rupee depreciated by 2.5% year to date and stood at 299.97 per dollar as the end of June. Top exports market remained with US, India and UK, while China, India and UAE were the leading import sources.
Gold prices steadied in Asian trade after 3 days of gains as investors turned cautious ahead of the key U.S. payroll data for clues on the Federal Reserve's policy outlook. Spot gold was largely unchanged at $3,352.75 an ounce, while gold futures for August gained 0.1%. Bullion found support from U.S. fiscal deficit concerns as House Republicans pushed to pass President Trump's sweeping tax cut bill, while uncertainty around U.S. trade deals ahead of the July 9 tariff deadline also supported sentiment. Gold has risen nearly 2.5% this week so far, gaining the ground it lost last week. Investors await the key non-farm payrolls report to get further insights on the Fed rate's path. Fed Chair Jerome Powell's recent cautious stance was seen as slightly dovish as he did not rule out chances of a rate cut next month. Oil prices fell in Asian trade, reversing sharp gains from the prior session after data showing an unexpected build in U.S. inventories raised some concern over sluggish fuel demand. Brent oil futures for September fell 0.6% to $68.68 a barrel, while West Texas Intermediate crude fell 0.7%. Both contracts soared between 2.5% and 3% after Iran's suspension of cooperation with the United Nations nuclear watchdog ramped up fears of a re-escalation in hostilities in the Middle East. But the gains did not hold, especially as markets remained on edge over increasing supplies elsewhere, while concerns over slowing demand also weighed. Focus is on a barrage of key U.S. labor readings for more cues on the world's largest fuel consumer. The Sri Lankan rupee has appreciated slightly against the US dollar today. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has reduced while the selling rate has also seen a decline. The Sri Lankan rupee has also appreciated against a basket of foreign currencies, including Gulf countries. With that, let's take a closer look at how the Sri Lankan rupee is performing today against other major global currencies. We're going in for a short commercial break now. This is the Nightly Business Report. Welcome back. Sri Lankan Airlines has come out on top in aviation sector on LMD's most loved brands, proving that the national carrier remains close to the hearts and minds of Sri Lankan travellers for its uniquely warm Sri Lankan service, extensive network, unparalleled direct services and seamless connections.
The most loved brands were determined entirely by LMD's discerning readership made up of professionals and the who's who of the local corporate sector in response to unaided, open-ended questions. Sri Lankan Airlines prides itself on providing an authentically Sri Lankan service. Hiran Hevavicenti, the chairman and editor-in-chief of LMD, commented, "It could well be that readership places a high intrinsic value on Sri Lankan being the country's national airline. The airline's exceptional onboard service extends to its flight operations. Sri Lankan operates close to 300 direct flights every week covering Europe, the Indian subcontinent, the Middle East, the Far East and Oceania. With direct and code share services, the airline connects Sri Lankans to 117 destinations in 59 countries across every continent, making Sri Lankan Airlines the natural first choice for travellers seeking convenient, direct flights and seamless connections out of Colombo." Meanwhile, the Cabinet of Ministers approved the appointment of a special presidential investigation committee chaired by former Auditor General H.M. Gamini Vijayasinghe to investigate alleged fraud, corruption and irregularities at Sri Lankan Airlines and Airport and Aviation during the period from 2010 to 2025.
AliExpress has announced the suspension of several low-cost shipping methods to Sri Lanka, citing recent tax reforms and regulatory ambiguities introduced by local authorities.
Starting July 7th of 2025, budget-friendly logistics options such as AliExpress standard shipping and China will no longer be available for deliveries to Sri Lanka. These services, while used by consumers to order electronics, fashion items and household goods at minimal shipping costs, are being discontinued due to what the platform described as unclear tax policies. In a notice sent to sellers, AliExpress stated that logistics routes to both Sri Lanka and Pakistan will now undergo offline processing, effectively removing the option to choose these economical delivery methods when declaring or fulfilling orders. While detailed information on Sri Lanka's recent customs policy changes remains undisclosed, the sudden move has sparked concerns within the country's growing e-commerce community. Retailers and online shoppers are expected to face higher costs and longer delivery times as a result of the changes. The development underscores the broader impact of shifting tax and trade regulations on global e-commerce platforms and cross-border consumer access in developing markets like Sri Lanka.
The Commercial Bank of Ceylon has announced a collaboration with Prime EV Automobiles, a subsidiary of the Senok Group, to offer exclusive leasing options to buyers of the new electric vehicle range represented by the company in Sri Lanka. The bank said these special leasing offers and benefits will be available till the end of 2025 and cover vehicle models such as E07, S05, L07, K50 and more, manufactured by Chang'an Automobile in China. Among the special benefits available to leasing customers during the promotion period are financing up to 90% of the vehicle value, customized repayment plans and tailored to suit customer cash flows, easy payment plans for insurance premiums, speedy approvals via the bank's island-wide branch network and special insurance premium rates offered in collaboration with insurance partners. Sri Lanka Insurance Life has once again set an industry benchmark by declaring an unprecedented 12.5 billion rupee bonus for its policyholders for the year 2024, the highest annual life insurance bonus in the Sri Lankan life insurance industry. This declaration brings the cumulative bonus paid to policyholders since 2006 to a remarkable 116.6 billion rupees, further solidifying Sri Lanka Insurance Life's unbroken record of delivering the highest bonus year after year. In a year marked by evolving economic dynamics, Sri Lanka Insurance Life demonstrated unwavering resilience and financial stewardship. The company's asset base grew to 238.6 billion rupees, while it continues to maintain the largest life insurance fund in the industry at 213.2 billion. On average, over 1 billion rupees in maturity and claims are settled monthly, totaling approximately 12.9 billion rupees annually, in addition to the annual bonus, underscoring the company's sound investment management strategies and its unrelenting commitment to policyholder protection. MDF held an exclusive screening and networking event at a newly reimagined heritage property Radical Gallery to demonstrate the work Australia's MDF has been conducting in the coffee industry since 2017.
The screening was accompanied by a curated gallery experience that took attendees through the revival of the Sri Lankan coffee industry and MDF partners' innovations. The gallery also included screening booths featuring human impact stories. Despite its re-emergence, not many in Sri Lanka or outside the country are aware of Sri Lankan-grown specialty coffee, and the aim of the event was to tell a story through the voices of those driving its growth by looking at how the Sri Lankan specialty coffee sector has since revived and expanded following the adoption of MDF-supported innovations across the coffee value chain. This evening brought together key stakeholders from the private sector and government, as well as potential investors including startups, roasters, processors, plantations and financial institutions to explore the growing business incentive for scaling specialty coffee in Sri Lanka. The evening featured remarks from H.E. Paul Stevens, Australian High Commissioner to Sri Lanka, who reaffirmed Australia's continued support in unlocking opportunities across the coffee sector. Binesh Panwala, CEO of Kahawatha Plantations plc, spoke on the growing interest of large-scale plantations and the future export potential of locally grown specialty coffee. The evening concluded with reflections by Deshan Wickramasinghe, country team coordinator of MDF Sri Lanka, who also shared an overview on the current landscape and what lies ahead for the industry. The event was held in the lead-up to the Sri Lanka Coffee Festival, which is scheduled for the 8th and 9th of July. The gallery was also open to the public on the 28th of June, drawing in over 200 coffee enthusiasts who explored the story of Sri Lankan coffee through film, visuals and immersive exhibits.
Let's take a short commercial break. Global business updates coming on the other side. Welcome back to the Nightly Business Report. Asian stock markets struggle for direction as investors awaited progress on US trade deals ahead of the July 9 deadline, while they assessed China's services data and Australia's trade balance figures. Japan's Nikkei 225 edged 0.2% lower after steep losses in the previous two sessions. The broader Topix index fell 0.2%. Hong Kong's Hang Seng index led losses with a 1.2% drop. In contrast, South Korea's Kospi rose 0.6%, while the Philippines' PSCI composite jumped 1%. Elsewhere, Singapore Singapore Straits Times Index was largely muted, while futures tied to India's Nifty 50 edged up 0.1%. Australia's S&P ASX 200 fell 0.6%. China's Shanghai Composite Index fell 0.1%, and the Shenzhen CSI 300 gained 0.2%. The S&P 500 and Nasdaq closed at record highs, boosted by gains in technology stocks and a trade agreement between the US and Vietnam that eased concerns over prolonged trade tensions.
U.S. stocks ended mostly higher on Wednesday, with the Dow little changed, the S&P 500 gaining nearly 0.5%, and the Nasdaq adding almost 1%. News of a trade agreement between the U.S. and Vietnam helped ease concerns about an extended trade war. The Trump administration has teased that a deal with India is also coming soon, but has said others may not be ready by the administration's July 9th deadline. Stocks on the move Wednesday included Tesla, which rose 5% even as the electric vehicle maker posted a big drop in second quarter deliveries. Some traders said the numbers were less severe than analysts' bleak forecasts. The stock has shed more than 20% this year. Other Magnificent Seven gainers included Nvidia, Apple, and Alphabet. But shares of Centene plunged more than 40% after the health insurer said it had withdrawn its 2025 earnings forecast after data showed a significant drop in expected revenue from its marketplace health insurance plans. Investors now turn their attention to Thursday's non-farm payrolls report, which arrives a day earlier than usual, with markets closed Friday for the July 4th holiday.
Xiaomi CEO Lei Jun said the company will not consider selling its EVs outside China before 2027. He says the company has to focus on domestic orders for its two models and is struggling to keep up with demand.
Xiaomi won't consider selling its EVs outside China before 2027. That was according to Chief Executive Lei Jun in a live stream Wednesday. He says the company has to focus on domestic orders for its two models. Until recently better known as a smartphone maker, the Chinese firm has launched its first two electric cars over little more than a year, and it's struggling to keep up with demand. The YU7 SUV launched last week saw about 240,000 orders in its first 18 hours on sale. Now Xiaomi is telling buyers they will have to wait over a year to get their car. Meanwhile, the firm's SU7 sedan has outsold the competing Tesla Model 3 every month since December, raising pressure on Elon Musk's firm in the key Chinese market. Many commentators asked Lei about the long wait times for customers during the live stream. However, he offered few clues, saying only that Xiaomi would strive to ramp up capacity, saying they were not told of the long wait times when placing orders. Xiaomi plans new factories on two plots of land near its Beijing plant to help meet demand.
And with that, we wrap up today's nightly business report. We value your opinion as always, so please share your thoughts and feedback with us through email at feedback.ad24english@derana.lk or via WhatsApp at 076-805-7933. We'll see you again tomorrow with the latest updates across the business globe. And until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.